Yeah, good morning, everyone. Friday in the US market, we saw some corrections. Market came off and even the futures are a bit soft. That was more driven by some weakness in data. Initial job claim also saw some increasing trend and some lower reading on preliminary reading of the PMI data. So that has kept the sentiment lower. Uh, we are seeing some softness in the economy and data and commentary of people over there. Yesterday, China, second largest steel maker in US, has said that the demand is seeing some slowdown, and even Infosys call also mentioned that the mortgage market is seeing some softness. So some softness are being seen now in the US economy. We Apart from that, if you see the key driver for the US market in the near term will be FOMC meeting, which is there on the Wednesday, and there the expectation is that 75 bips increase in the interest rate. Some people are also even expecting that it can be around 100 basis point, but largely it is expected that the 75 basis increase in the interest rate is coming. So that can have some impact on the US market. Asian taking clue from the US market, even Asian markets are also soft today. In commodity, oil has corrected on Friday, same time it was at around 105 and now it is at around 102.5, almost around $2.5 corrections. Iron ore is seeing somehow increase in today's market in China by around 7%. That is mainly driven by the news that China government is setting up some large company in China to acquire the assets of the iron ore in international market, and also coordinate the import of iron ore into the country from different markets. So that is leading to some positiveness in iron ore in today's trade. And also steel is also up by around 1.5%. So overall seems more of a softness in the Indian market, also driven by international market. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Swati. From the last 4 to 5 trading session, we are witnessing a very strong pullback rally on the Nifty front, which took a Nifty above 16,700 levels on the closing basis, which gives us some sort of a positive sign. I believe the immediate resistance for the Nifty is placed at 16,770, 16,800 marks. Once it's manages to give a breakout of that resistance level, then this rally is likely to be extended towards 17,000 levels. Resistance provided by its 200 DMA. The overall view will remain a positive as long as Nifty sustains above 16,570 level, which is a support provided by its 100 DMA. So the view will remain positive as long as 16,570 levels are remain intact on the closing basis. Coming towards the Bank Nifty, we have seen a very strong pullback rally into the Bank Nifty as well, which has maintained a very positive closing above 36,700 levels, gives a potential up move in the near term, likely to be continued towards 36,980 will be the first resistance zone. Any move above that level, we expect that the Bank Nifty will touch the fit of 37,000, 37,200 levels. Whereas on the downside, 36,400 is the immediate support level. If it's break that level, then we are going to witness some sort of a profit booking, which might test the Bank Nifty towards 36,100, 36,000 levels. The overall view will remain a positive in the Bank Nifty as well, as long as it sustains above 36,400 levels. Coming towards the Nifty Finance, for today intraday purpose, 16,630 is the first resistance zone. Above that level, 16,740, 16,800 levels can be seen on the higher side. Whereas on the downside, 16,450, 16,340 are the immediate support levels on the Nifty Finance. The overall view will remain positive as long as 3 indices sustains above the mentioned support levels. Coming towards the stock specific, we are witnessing a very good amount positive momentum into the cement stocks as of now on Friday. Just keep eye on Ambuja Cement. This particular counters really looks very good on the weekly and the monthly charts. I believe it has a potential to reach up to 390 to 400 levels. So those who are looking for a cement counter, one can take a buy call in Ambuja Cement with a stop loss of 360 for a target of 390 and 400 levels on the higher sides. Stock specific Kotak Bank really looks very good on the banking front since the bank Nifty is doing very well and this particular counter is well placed above 1500 TMA. It has a potential to reach up to 1920 to 1900 levels on the higher sides. One can take a long position in the Kotak Bank as well. Stop loss can be kept at 1790 for immediate target of 1920. I think that's it from my end. I request derivative guys to take a call forward.
Thank you, Swati. See, on the derivative front, looking at the overall open interest, the open interest is more or less, in range, in fact, decreasing. So, short covering was taking shape. But even after a 1000 point rally, you're seeing open interest fall. So, this after, such a huge rally, it does make a case for, some profit booking going forward. Also, the PCR has gone up, just near the 1.4 levels, even though it is still, below the oversold zone, overbought zone. But, above 1.4, again, there is a sign of reversal coming in because it has started to fall from 1.5 or to 1.4 again. So that is again not a very good sign. Also, looking at the options data, there is sizable amount of open interest built up from 16,800 and 17,000 call strikes, indicating resistance on the higher end. Also, the PCR at 16,700 strike isn't above one as yet. So all in all, some amount of selling pressure can come in where Nifty can witness some, profit booking up to 16,500 levels, which is a good support area. 16,000 put continues to hold the highest open interest amongst puts, even after staying above the 16,500 levels for some time. So another negative there. So, some profit booking is likely for a next couple of trading sessions. From the stock specific front, nothing much to speak about. There were results of some biggies in the last week. And because of that, we will open most probably gap down. At this point of time, only IT sector seems to be the sector where some amount of buying can come in if it opens down. So Wipro is the best bet at this point of time to be bought at these levels. Also, Reliance, there seems to be some short built up which has happened, and some amount of selling pressure can come in here. And this stock can, for the next 2-3 weeks be under consolidation, after which, some buying will come in, but it doesn't seem like, it will go up very suddenly from today onwards. So look out for the same. Ultratech Cement has witnessed good amount of open interest built up. Looks like this stock is ready for another up move. So look out for the same. That is about it. I'd like to ask the fundamental team to take over, please.
Good morning. So over the weekend, around 5 banks have declared results, out of which the ones which continue to show improvement are Kotak Bank and ICICI Bank. As the technical team is also bullish on Kotak, the result was good. Advances showed a growth of 29% year on year, although that was on a low base, but on a quarter-on-quarter basis, it was 3.3% growth. Slippage came slightly higher because of seasonality in quarter one at 2% against sequentially 1.1%. However, the recoveries and upgrades were very high, and because of that, the gross NPS declined by 10 basis points to 2.2% in quarter one. Restructured book and SMA2 remain very low for Kotak in particular, and we remain positive on the bank. ICICI result was also in line with expectation. Slippage again here also, like Kotak, came slightly higher because of seasonality at 2.6% again sequentially to 2%. But otherwise on all fronts, result is good. The GNPA declined by 20 basis points to 3.4%. Outstanding restructured book declined from 1% to 0.8. BB and below, after many years, it continued to hover around the 2% mark since last 4-5 years. But gradually in last 2-3 quarters, it has fallen. Now it is below 1% mark at 0.9%, which is a healthy sign. Bank holds a contingency provision of almost 1%, which is again very healthy, and advances growth remains buoyant at 21% year on year and 4.3% quarter on quarter. So all in all, this is a good portfolio stock. We remain positive. Rest of the bank, the results were not so good. Bandhan Bank result was below expectation. Gross NPA increased from 6.5 to 7.3%. Collection efficiency for microfinance declined to 91% against 97% in March quarter. The decline was across all states and not just in Assam where there are floods, but also in West Bengal and all other states as well. So one should avoid the stock. Karnataka Bank result continued to remain weak with deterioration in asset quality. Credit cost was much higher at 2.5% against just 0.7% in March quarter. Slippage also increased to 4% against 2.8%. One can avoid the stock. Yes Bank result was in line with expectation. Credit cost was lower at 0.4% versus expectation of 1.5%. But despite such low credit cost, ROA remains depressed at just 0.4% due to subpar NIMs at 2.4% and sticky cost to income at 78%. The bank has guided for 2.9% of exit quarter NIM in FY23, 2.4% OPEX to assets, 2% slippages, and ROA of 75 basis points in FY23. All these targets seem to be difficult to achieve looking at what they have been posting in last couple of quarters. But even if we were to assume that the bank delivers these kind of numbers, even then the valuations are not cheap at 1.1 time price to book and 1.4 time price to adjusted book. Also on the asset quality side, the net stressed asset, which is net NPA plus the unprovided portion of restructured book, SMA and other NPAs, that increased from 20 by 2,600 crores to 24,400 crores, which is 13% of total loans against 12% in March quarter. So even asset quality has deteriorated, and we suggest to avoid the stock. Lastly, Hdfc Asset Management Company result was above expectation due to better than expected margins. The total AUM declined 4% quarter on quarter, and market share continued to decline to 11% from 11.3% in March quarter. So if we look at last 12-13 quarters, continuously the company has lost around 30 basis points market share in every quarter sequentially, and that trend continues. However, one thing to note is that on the equity side, the market share decline has stopped, and equity market share was flat at 11.5% sequentially. And also overall mix for the company is shifting from debt to equity, and equity mix has increased to 47% now against 41% year on year. And this has led to slightly higher than expected margins. Management indicated that incremental yields on equity AUM are nowhere close to on-book yields of 70-75 basis points, which implies that going forward, there will continue to be pressure on equity margins going forward. So we are neutral on the stock. Thank you.
Yeah, Kansa, can't hear you.
Yeah, I'll take over.
Yeah, please.
Ultratech Cement reported numbers on Friday, and the result was above expectation. Sales volume was in line at 25 million ton. Realization came at 6,056 per ton versus expectation of 5,643 per ton. EBITDA per ton came at 1236 versus expectation of 1,072. Management is quite optimistic of cement demand to recover from Q3 and will stay firm till FY22, given the pre-election spending. Though margins are going to remain under pressure in Q2, it should recover from Q3. With the ongoing expansion, company will add 16.5 million ton capacity in FY23 and will benefit with the increment demand in FY24. The company took a price hike in Q1 FY23 around 5 to 10%. However, the exit prices in June were lower by 3 to 5% than the average, whereas July prices softened further. The fuel consumption cost during the quarter stood at 184 per ton, $184 per ton, as compared to $164 per ton sequentially. The cost is likely to increase further in next few quarters. However, the petcoke have started to soften with decrease of 10% month on month in July, and the effect will be the impact will be seen in from Q3. So we are positive on this company from a long-term perspective. JSW result was below expectation. Sales volume came at 4.5 million ton versus 6 million ton sequentially. Realization per ton came at 83,519 versus 76,838 quarter on quarter. EBITDA per ton came at 9,597, which was impacted due to a few one-off expenses. Post adjusting the one-off expenses, the EBITDA per ton stood at 13,943. Management has guided its production and sales volume to be 25 million ton and 22 million ton respectively, with more domestic sales and less of exports. It expects the steel prices to remain range bound in the near term, and the cost is likely to reduce by around 50 to 60 dollar per ton in Q2 as compared to $421 per ton in Q1. This is the coking coal cost. Company will consume high value inventory by October 22 and will see better margins from Q3 onwards. We are neutral on this company. Thank you.
Yeah, good morning everyone. Infosys has posted in line with expectation set of numbers for the quarter. With good pipeline, management has upgraded revenue growth guidance for FY23 to 14 to 16% versus last quarter guidance of 13 to 15%. Management indicates margin will be at the lower end of the guidance of 21 to 23%, which is lower than the street expectation. Outlook is neutral. eMudra has posted improved set of numbers for the quarter, majorly on the revenue front. Revenue grew by 15% Q on Q and 21.7% year on year and came in at 52.2 crore. Higher revenue led to higher profit to the company. Stock is trading at 35.4 times Q4 annualized EPS. Outlook is neutral. Thank you.
Infosys reported numbers, and numbers were mixed bag in the sense that O2C business saw below expectation number, whereas Geo has reported better than expected number, and retail business has reported in line set of numbers. Overall revenue apparently looks like has reported numbers which are EBITDA wise it was more of in line, and also sales also in line with expectations. From here on, Geo has seen very good increase in subscriber base, and also ARPU has increased substantially quarter on quarter, which was not expected. ARPU, which was there at around 167.6 last quarter, has increased to 175.7, and there was almost 9.7 million addition to the subscriber base. So that is put and in retail business, if we see, the revenue was up by around 1.5% year on year. But if we see 3-year CAGR, the revenue has grown by around 10.5%. So that's more of a in line the CAGR growth of last 3 year. And EBITDA margin had seen some improvement. It has come at 7.6% Q on Q, 6.9%, and year on year 5.8%. So overall seems more of a in line, and outlook is also looking at it is more of a neutral. O2C business, which has seen good performance in this quarter, based on quarter and year on year, though lower than market expectation, will cool off in the coming quarter with decline in margins, GRM margins, and also petchem margin was also lower in this quarter, so that will remain soft. So O2C business will see some softness, but other two business can continue to do well. In the valuations also, around 20-25% value comes from O2C business, and the rest is come from retail and geo business. So that has a lesser impact on the overall valuation of the company. So overall outlook is neutral for the company. Then Finolex Industry came up with the numbers here. As expected, result has shown declining trend, and it has come below expectations, mainly on account of declining PVC prices that has resulted into lower offtake and also inventory loss in this quarter. As such, EBITDA margins declined to 10.6% versus expectation of 14.7%, and Q on Q 16.6%, and year on year 21.7%. So still post this quarterly result also, PVC prices are continuously under pressure, and today it has come to almost around $1,100 from a peak of $1,800 and last quarter end of around $1,250. So still stock can remain under pressure. A small company, SSI Paper, has come up with good numbers, and the result has showed good performance, wherein we had seen good EBITDA margin expansion from last quarter 16.8% to 20%. So the reason being is that this will have a positive impact on the other paper company also. Other paper companies are also likely to report good numbers looking at the SSI Paper's numbers. Then Navin Fluorine came up with the numbers, and the numbers were marginally ahead of expectations, but more of a driven by specialty chemical. CRAM business had seen year-on-year decline, but Q2 will see some good improvement in the performance of the Navin Fluorine because of the start of the project of Honeywell, which as company has said that it has commenced. So that will add up to the revenue and profitability in near term. Then going forward, results for 27th. So APL Apollo is likely to report number as the steel prices are declining. We may see some softness in the result of APL Apollo also. Herein, though EBITDA per ton is likely to see stable quarter on quarter from last year 4,800 to this year also, this quarter also 4,800, but the volumes are likely to show some decline quarter on quarter. So volumes are likely to see quarter on quarter around 23% decline in this quarter. Then Biocon is likely to report numbers. The numbers are likely to be okay. Margins are likely to see softness quarter on quarter from 24.6 to 23.9%. But these margins are much lower than their consistent margin of over 26%. So will continue to remain soft. Then CG Power is likely to report numbers, and that numbers are likely to show improvement. Year-on-year revenue growth is expected at around 36%, and EBITDA margin is also likely to see expansion, both quarter on quarter and year on year. Year on year, it is likely to expand by around 180 basis points. So result is likely to be good for CG Power. Then Clean Science is also likely to show improved set of number. Quarter-on-quarter revenue is likely to grow by around 4%, and year EBITDA margin is likely to also expand by around 30 bips. Then Colgate-Palmolive result is likely to be more of a okay set of number. Revenue growth is expected at around year on year by around 5%, and EBITDA margin is likely to remain flattish year on year. Then Coromandel International can report good numbers. We had seen that the GSFC fertilizer division has shown good numbers. So quite possible that Coromandel International can also show a better number. Though year on year revenue growth is expected at around 37%, but the margins is likely to see year on year decline, but at 10%, which is their reasonable margin which they report regularly. So last year there was some exceptional high margins. Gujarat Fluoro is also expected to report good numbers. Here revenue is likely to grow by around 25% and margin to see expansion year on year, and EBITDA is likely to grow by around 50% year on year. So Gujarat Fluoro result is expected to be good. Then JK Cement is likely to report number, and here also EBITDA per ton decline of around 125 rupees is expected quarter on quarter, which is the case with other cement company also. So that is more in line with other cement company. JK Cement is likely to report number. Laurus Lab is likely to show results, report results, and here the results is expected to be better. It can improve by around revenue is expected to increase by around 12%, and the EBITDA margin quarter on quarter will see around 200 bips expansion in the margin. Then Maruti Suzuki is likely to report number. Here we already know the volume and all. So margins are likely to see quarter on quarter marginal decline from 9.1% to 8.8%. So as such result is likely to be more of a okay set of number. Then Tata Motor is likely to report number. Here the numbers are more of a declining, mainly driven by JLR. So JLR numbers will be, volume will be declining quarter on quarter and year on year both. That will lead to lower results for the JLR, for the Tata Motor as a whole. Otherwise, CV volume are expected to improve, and margin is also expected to improve, and also PV margin, that is passenger where domestic result is likely to show better results. So domestic result is likely to be good, but JLR will continue to remain soft in this quarter. So that's all from us. Thank you very much. And now I'll hand it over to commodity team.
Yeah, thank you, sir. Good morning, everyone. Overall commodities, there should be a buy and dip strategies. Particularly metals are looking good. Copper, zinc, aluminum are attractive. Pullback is expected, so buying on dips is recommended. Copper maybe August contract 629, 628 levels should be good level to entering long. With a stop loss of 622. Prices again are expected to test 640. On closing basis, if prices are sustaining, then we might see further rise in the metal. Zinc also looks attractive. 272, 270 is a good support zone. So prices are expected to test 276, 278 levels. Apart from that, gold one can buy around 500 and 50,500 with a stop loss of 50,300. Prices again are expected to test 51,000 on the higher end. Silver, we could see a range bound movement from 54,500 to 55,350. There should be a consolidation in this range. Close below 54,500. We can see further weakness in the counter. Apart from that, crude oil looks weak. should test 7400. So selling on rise is recommended. Week below 7650. So in any rise, one can sell with a target of 7400. That's it from me. Ria should take over from here.
Good morning, everyone. So let's look at the currency. So Indian foreign exchange reserve have fallen to their lowest in over 20 months as the central bank have stepped in to intervene from moving past the $80 mark. Now the reserves have fallen by 7.5 billion to 572.7 billion as of July 15. The Indian Central Bank saw its reserve falling from 15.5 billion it has done so most towards defending the currency. Of course, taking into consideration the market fears that is there around the Indian rupee, the RBI governor has said that they are closely monitoring the situation and are ready to defend any volatile situation into the Indian rupee. On the forecast perspective, I think the depreciating rupee is now becoming more worrisome as it could put additional strain on the already worsened conditions of our trade deficit, the inflation, corporate margins, and with them rushing to hedge their unhedged exposure, which is around $79 billion in foreign debt, according to the data released by RBI, it could further dampen the appreciation momentum that the governor is trying to get into the Indian rupee. For now, I think if you look at the intraday sessions, it has opened on a bearish note. And on the overall perspective, I think it is still into the consolidation zone. The bearish buck will be into the Indian rupee once it breaches the support level of 79.74 into the future contract. And speaking about into the spot market, it is again into a consolidation phase. Strong resistance around 80.25 levels, and for it to come towards the bearish tone or towards the appreciation tone, it should breach the levels or support of 79.70. So that is a very important support level into the spot market. For the intraday sessions, I think you should look forward with the breakdown of the level of 79, 78, 79, 75 to go short into the Indian rupee. Unless that happens, I think it will remain into the consolidation zone with the 79.95, 80.05, the maximum upside that you can see into the Indian rupee in today's sessions. For the other pairs, I think you can go safely into the JPY INR. You can go long into the JPY INR around the same levels for a target of 58.90. Keep a strict SL at 58.40. For the Euro INR, I think 81.60 will be a very important level. When it goes beyond that, you can go for a 25 paise long into the Euro INR for 81.75. Keep a strict SL at 81.45. So these are the few strategies that you can follow into the intraday sessions. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.